I'm going to talk more about credit scores. This is so important, especially for young people. So I'm going to talk more about this because many people need to learn about credit scores, credit reports in order to buy a house, right? I am a real estate processor. I've been in the industry for quite 3 years, and I want to give you more insight on what it looks like when buying a house. So what is a credit report versus what is a credit score? So the credit score is just a number, and the credit report shows everything. It shows which credit card companies you owe money to, whether or not you've been past due. It shows the balances. It shows the monthly payments. It shows if your name doesn't match. It has your social security, has your date of birth. It shows your name, the addresses that you've lived previously. So it shows a report of who you are basically, and it's going to show everything. It's going to show everything that is active. So it's going to show any student loans that you have, whether that's like private student loans. You're going to see personal loans. You're going to see your car loan in there. If you have a car loan, you're going to see the houses that you have owed, or the houses that you've been, or it shows it shows everything that you can possibly think of. And sometimes we don't remember some of the places we've lived, and it's going to show in there. It's going to reflect. It's going to show how long you had your social security for, and it shows all these things. And it's going to show three different numbers from different credit report agencies, and those are Equifax, Experian, and TransUnion. And it's gonna take the medium, and the medium is gonna be considered what your lender is gonna choose for decision making. So this is very, very important, and that's why it's so important to be with someone who is really good with their credit. They're really good with their money, because it can affect you. Normally in real estate, or at least in the place where my lender, where I work for, we take the medium number of both borrowers, and whoever has the lowest, we take that lowest number and we consider it for decision making. So it's very important to have someone that is very, very a co-signer, or you married someone who is very careful with their finances, because you don't want to be with someone who unfortunately can't take care of their credit score, and that's the reason as to why you have to have that's the reason as to why you're having to pay thousands of dollars for your loan. So why a credit score or a high credit score is so important? Well, it can potentially save you from so much interest that you have to pay. If you have a high credit score, that means that you have the leverage to get a lower interest rate on that loan for that property. If you have a low interest rate, a low credit score, that means that lenders are a little suspicious, and they just want to be on the safe side, and they want you to pay they don't trust you, and therefore you will have to pay more money in interest. So with that being said, you have all of this information about credit scores, credit reports. If you have a credit score that is in the 700s, then you're in the good shape. If you are in the 600s, 70s, 80s, then you are in this, you're literally have to have a strong application in order to even qualify for the loan. I mean, I understand how hard for some people it can have, how difficult it can be for some people to have a good credit score, especially if you've had to live in credit cards your entire life because you didn't get support from your family. But now that you're an adult, you need to be more wise with you got to be wise with your own money, and understand that credit cards do have an impact on your future. If you do not make your payments on time, that's an issue. If you make your payments on time but you only make the minimum payment, that's an issue too, because you're not advancing. when you're just paying the minimum, which is typically $25 a month, you're not advancing as much. I always recommend people never use your credit score. I mean, never use your credit card if you don't have that kind of money in the bank. Because if you say let's say that you put a purse for $1,000 and you don't have $1,000 in savings, what that does is that you're going to be continuously paying so much money for that purse. Instead of just being $1,000, going to be more than that. It can be $1,500, $2,000, $2,500, depending how long it takes you to pay that off completely. So I always recommend people to pay your credit cards in full every month, so you don't incur any interest on that, because it can eat up your credit. And that's that. Another thing that I always want to let people know about this is, do not co-sign for anyone. Whether that's co-signing with someone to purchase their first car, don't do that. It doesn't matter if they're your family members. It doesn't matter if you've known them for 20 years. It doesn't matter if it's your child. If you see that they're not financially responsible, then that's going to come back to you. Let people know that you just can't do that, and that you can't co-sign for everyone. If you don't trust that person, don't do it. And even if you do trust this person may not have bad intentions, but definitely they can have an issue later on in life where they're not able to work. And if they're not able to work, they're not going to be able to make payments on this car that you co-sign, and that's going to come back to you. And the car companies are going to, or the bank, or whoever financed this car to you, to both of y'all, is going to come after both of y'all. So make sure that you are prepared. Don't co-sign for anyone, period. If people don't qualify on their own, that's a reason. If they don't qualify on their own, that's their problem. That's not your problem. Just because you have worked really hard on your credit card, it should not be fair to be lending that credit score to anyone else. You work for it, and sometimes people do this out of pettiness, or they feel like they owe to their family members. And the thing is, you don't owe anything to nobody. Quit co-signing for someone. If they don't qualify on their own, there has to be a reason why. Perhaps they don't have a good credit score. Probably they don't have a credit score. They don't have a credit report. They don't have sufficient credit report. They don't have a stable job that makes them not eligible to get a car loan. Just do not co-sign for anyone when it comes to getting a house, getting a car, signing on a credit card. You will be responsible if they default. And if their credit score goes down, yours will also go down. So be very mindful. Don't co-sign for anyone. I repeat, don't co-sign for anyone. Just co-sign for yourself. Just be for yourself, because if you, let's say you default, that's on you. That's not on anyone else. And then your credit score is going to drop, but you're not going to feel guilty. You're not going to feel bad. You're not going to feel stressed. The only person to blame is yourself. So be very mindful of this. I've had a couple family members who have co-signed for other people, and unfortunately they default on that card note, and they have to turn in the car, and then that other co-signer's credit score goes down. So that's very, very sad. Don't do that. Some family members will hate on you for not co-signing, but at the end of the day, you got to protect yourself, and you got to protect your own little butt. So that's sad. So with that being said, thank you so much for watching this video, and I'll see you in the next episode. Bye.